When Bitcoin BTC launched in 2009, it was motivated by the distrust of financial institutions and their fees and the inflationary practices by central banks during the Great Recession. Bitcoin was supposed to usher in an era of decentralization, financial inclusion and democratization. Yet more than a decade later, with Bitcoin prices surging, we're witnessing the digital asset being hoarded by large, centralized financial institutions, risking the principles behind its creation. Bitcoin is now in danger of being predominantly in the domain of the financially included, exactly the types of institutions that the creators sought to avoid in the first place. Related, why institutions suddenly give a damn about Bitcoin. Meanwhile, in the context of other potential applications of blockchain on which Bitcoin and other cryptocurrencies are built, big tech has matured in its midst, with many seeing the problems of anti-competition and the abuse of power. Problems such as economic and financial control, data privacy, disinformation and the general usurping of users are the symptoms of structures that we have let become too powerful. It is 2021, and we risk never fulfilling the promise of adoption that will be possible with these technologies. While the community has been preoccupied with profit-making from crypto, we have the opportunity to create even more massive value as an industry. The potential is not today's crypto market capitalizations but the billions of users and trillions of dollars of market potential that are this technology's true promise. Skepticism of the mainstream. As an entrepreneur who was around for the last technological disruption of the Internet, I played a role in one of the Internet's most dominant categories, social networks. As a co-founder of LinkedIn, I'm struck by a similar kind of idealism that pervaded the Internet 1.0 era, but I also see the chasm between those in this new art and those who have yet to experience its benefits and question its existence. Crypto and blockchain remain in their infancy many years after their creation. There are some hundreds of millions of Bitcoin and Ether (ETH) wallets, while the Internet boasts 4.7 billion users. Even under an optimistic assumption of 250 million wallets and 1 user per wallet, crypto's user base represents only 5% of Internet users. The recent ascendancy of crypto's market cap to $1 trillion is only 1% of the worldwide public stock market's total market cap, which stands at $90 trillion. Most blockchain projects today still have woefully limited adoption, and their tokens are subject to volatile speculation. With the exception of Bitcoin, which is finally being endorsed by the experts, and decentralized finance, which in its current speculative state has the potential to demonstrate real-world value, this community knows its fair share of skeptics. The mainstream still wonders whether crypto and blockchain are solutions in search of a problem when centralized solutions seem to be working just fine at scale. The industry still has not captured the imagination of the mainstream nor shown signs of mass adoption. Putting the ideals aside, I believe decentralized technologies can fix the vexing problems of big tech and finance in the years to come. To do this, we need to adopt a more pragmatic, business-minded approach to our industry. This mentality might run counter to the sensibilities of our entrepreneurs in the community. I've seen too many efforts that don't work on products that are relevant to the mainstream. Nor do we measure success in terms of traditional key performance indicators such as product market fit, user bases or revenue. We still talk about utopian concepts and the size of our communities that speculate on tokens but don't mostly use them. Appeal to mainstream audiences, not just enthusiasts. As an industry, we need to work on solutions that appeal to the mainstream, with a focus on applications or decentralized applications. We should figure out the applications before investing too much more in infrastructure projects that abound in the ecosystem. Today the world's top companies provide applications for end users and are not infrastructure providers. Take a look at the top 50 internet companies. Almost all of them offer solutions to a large addressable market of users that have big active user bases. What's more, for the ones offering infrastructure solutions, they started by bringing applications to market first. Only after these applications achieved some form of scale did these companies offer infrastructure tools. The most notable examples include Amazon and Amazon Web Services in 1994 and 2006, respectively Facebook and Facebook Platform in 2004 and 2007, Google and Google Cloud in 1998 and 2008, and LinkedIn and Confluent in 2003 and 2014. These companies fulfilled a need first for ordinary users, and only after their infrastructures were scaling did they launch their own tools. By then, these infrastructure technologies solved real-world needs, and they were also conveniently battle-tested. Sure, there were also plenty of infrastructure companies created during the first Internet era, but can we name any of them today? Our industry might have gotten it wrong when it focused on infrastructure from the beginning. Thanks for watching. Please subscribe and visit our website. Click link on description.